Hey, it's your boy, everybody. It's your man, Sean McLaughlin. Option Sean on Twitter X. Today is Thursday, November 20th, 2025. How you doing out there? How you doing? Does the market have you a little bit on edge? This is the All-Star Options Jam session where we are going to review any action amongst the All-Star Options portfolio over the last week. We've had some action, we've had some exits, we've had some profitable exits, and we've had some not so profitable exits, as you can imagine. We'll review that. Usually, we'll update some stops on positions that we have open, but for the first time ever, I've been doing this show for years. For the first time ever, I'm not updating a single stop. None of my positions have done anything to warrant me moving the stops. That's neither a good nor a bad thing. It's unusual. But we do have some things to talk about in the portfolio. We do have some new trades we could review. But let's just jump right into it here. Let's bring up the S&P. Boy, when the opening bell rang this morning, spirits were high. We had a big gap higher. Everybody was happy about the Nvidia numbers. I had a funny feeling about it though, for a couple of reasons. I was on the morning show this morning with Steve Straza, and I said to him, I said, man, I would have thought that Bitcoin would have had a more positive reaction considering everything else is rallying. And I didn't think that that was necessarily the worst thing in the world, but it caught my attention. I was like, that seems weird. Not that Bitcoin moves the market at all. It's as JC likes to say, it's meaningless compared to the total assets of the world, right? But to me, it's always been an interesting gauge of risk appetite. When Bitcoin is rallying, that generally means people are willing to put risk on. And when Bitcoin is falling, people are retrenching and not wanting to put risk on. And so when we saw the market gapping higher this morning and everybody was excited and Bitcoin couldn't even get off the mat, that was strike one for me. Strike two was I had a number of positions last night that had just barely triggered exits here in the All-Star Options portfolio. Just barely, right? But hey, exit's an exit. I would have thought that this morning we would have seen a bounce in some of those names. I mean, at least one of them, maybe two of them, but we didn't see any bounce in any of those names. And these are, stocks that were former leaders in this bull market. So I would have thought that if the Nvidia news was going to turn everything around the way the stock market was reacting, at least at the open, I would have thought that these things would have had at least a bounce and kept us in the ball game. There was no bounce. I exited 3 positions this morning. So those two things right away said to me, I don't know about this rally. It feels a little suspect. And sure enough, boy, we've given it all back and then some today. Pretty ugly red candle. You can see it there on my chart. Where do we go from here? I don't know, but it looks like we're at a very key support level here, right around 652, 653 in the SPY. If we can bring up the Qs, you'll see like we're right at this 590 level. This level feels very important to me. If we can't hold this 590 level, we may have further to fall. And guess what? I have some good news and some bad news on that. The bad news is the VWAP from the April lows, which is arguably when this perhaps new bull market started. If you've been watching JC's videos the last couple of days, we'll save that discussion for somewhere else. But at least we had a major low in April, right? And the VWAP, which is this yellow line, kind of hard to see in my chart, it is unfortunately significantly below where we are right now. The Nasdaq could fall another, what's that, 4 or 5% from here and just kind of bounce off the VWAP. And the 200-day moving average, which is a rising 200-day moving average, is even further below that. And while it could be painful, if NASDAQ and SPY looks very similar, but if the NASDAQ were to pull into this area here around the VWAP and the rising 250-day moving average and kind of fight and hold support there, then we're still in a bull market. I know that's going to sound, it's not going to feel that way if we drop another 5-6% from here, especially in a lot of the high beta names that we've got on the books. It's not going to feel like a bull market, but man, we've got some room to pull back if the market gods want to. And with NASDAQ, with the Qs barely hanging on to this 590 level, this feels like a level we got to pay very close attention to. Be very interesting to see how we close today. If we close on the lows today, watch out, at least in the short term. Those are my thoughts on that. Speaking of, we have these long November 598 puts. We've had these things since September. I started putting these hedges on in September. And you'll remember when I put the trade on and I even put it in the research piece about this trade. I said, look, I hope this trade loses. I hope it loses money, right? Because if it does, that means the bull market's intact and the rest of our portfolio is doing quite well. Well, with today's action, these puts are right back in the money now, increasingly so as the market falls further from here. These options expire tomorrow at the close. So if you're in this trade with me, your plan of action should be to exit this trade no later than tomorrow afternoon. Don't wait till like the last second in case you forget about it, but certainly set yourself a reminder in the afternoon tomorrow. You're going to want to get out of these puts. I don't have a magic answer of where you should exit these. My plan is to hold them till the end of the day, because at the end of the day, these are a hedge. This trade was a hedge to begin with. It was always a hedge. And so I'm going to hold this thing till the end of the day tomorrow. I'll get out, 5-10 minutes before the closing bell, and they may pay us pretty well. We'll see. I mean, if we have a follow through, which I'm telling you, this is a pretty ugly looking candle right here. If we have follow through to the downside tomorrow, heading into a weekend, it could be pretty ugly. It could get pretty ugly pretty fast. So I'm feeling pretty good about these puts. But guys, if you're in these puts, I know some people are asking me about it in the chat room. Tomorrow's the day, last day. We'll be getting out of them tomorrow. And at least I'll be getting out of them at the end of the day tomorrow. All right, so that's it with the Qs. Let's review the portfolio action that we've seen this week. Let's just get the good news out of the way, because there is some good news. It might not feel like good news, but there's some good news. This Hut 8 Corp, HUT, one of those Bitcoin miners, I believe. Yeah. We were long the September 25 calls. We got into these over the summer, and these were for next September. So we had about 13 months, 14 months of expiration when we put these on. We had quite a ride. We bought the 25 calls for $650. Had quite a ride. Got all the way up to $55 at one point. This was looking like a monster win for us. Well, it ran out of steam around 55. It broke our level, my stop level on Thursday of last week. So on last Friday, I exited the trade. Got out for $19. Still a great win, right? We got in at 650. We're out at 19. That's triple our money, right? Just kind of felt like a loss because we had given back a significant amount of our open profit in the trade, but still, by any objective measure, a very good trade. So if you guys rode this with me, congratulations on that trade. That trade like that more than makes up for the rest of these trades we're going to go through, which are all small losers. So in no particular order here, let's go with Interactive Brokers. This was a March 65.85 bull call spread. We've been riding this thing for a few months, and it was looking pretty good up until about a week ago. Once it closed below 64, that was my signal to get out. And we got out for 485. Not bad, considering I paid 550 for it and I held this thing for 3 months, and it's below where I got in. The stock was trading around 64 when I got in. I got out when the stock was trading around 62. So the stock is down and 3 months have passed. I only lost just a little bit. So not bad, right? I paid 550, got out at 485. Well, I'll take those kind of losses anytime. All right, next up, Costco. We had a call calendar spread on in Costco. Thankfully, the short November calls that we had helped take the sting out of this trade a little bit. Those calls basically became worthless. And so really the only value was in the January calls that we owned. So we closed the whole thing out, got out for $750. We paid $16.50 to get in. We're out at $750, not a total loss, but still a loss. And but we're out with Costco losing that 905 level, and then even with that wick we had yesterday, pretty ugly signs for Costco. Maybe that little wick here was a shakeout, and that's the bottom. But I don't see this thing rallying too much further from here. I need to see a fresh setup before I get back involved in Costco. Okay, now here are the 3 trades I exited this morning. First up was Uber. Boy, I'm glad I got out of Uber when I did. This thing just cratered soon after we got out. We were long the March 120 calls for $3. Sold them today for $1. And Uber is looking worse for the wear since we got out. So glad to be out of Uber. XPEV. This was a trade that we were waiting for earnings to get out of the way, and then we were going to use 22 as our stop loss level. Well, we got the earnings out of the way, and our stop level has been triggered. At that somewhere just after the open this morning, I closed the trade for 285. Not bad considering it paid 425 to get in. Not a bad loss. But man, ugly performance there in that chart over the last week, certainly. And lastly, Peloton. This one I actually kind of forgot about. I exited this one later in the day or later in the morning than I meant to. Kind of slipped my mind. But I told you guys in the chat room when I got out, and I got out for 32 cents. Probably would get much less than that now if I were to look. But we were along the January 8 calls for $1. Got out for 32. Not bad. Oh well. So that's it. Those are all the trades that we've exited this week. And again, three of them happened this morning. And they were, to me, turned out they were the canaries in the coal mine when the market was opening up more than 1% higher. Look, it was green across the board, green everywhere you looked, it seemed like. But then I looked under the hood of my portfolio, and my positions that had already triggered exits were not bouncing at all. So that was the red flag. All right. Okay. So I mentioned stops we need to update. Guys, I have no stops to update this week. The positions we have on, none of them need to be, no stops need to be updated. You can see the list of my open positions here along the right-hand side. I don't know if there's anything notable here. We already talked about the Qs. That was the notable thing because we got to exit that tomorrow. But some good news here is the IBM. We got an iron condor in that's hanging tight. We're delta neutral on that trade. The DHT. I mean, look, it's a long trade considering what the market's been doing. Hanging tough. That's good. J&J. Look at this. Nobody's telling nobody, or J&J's not listening to anybody talking about a bear market. This thing's looking pretty good. I feel great about that. This one, LHX, is hanging on the edge. ETR is kind of just hanging here. Ralph Lauren is still trading well, still looking like it's moving in the right direction. REO, middle of the road. This Alpha Tech Holdings is still, I like the way it's trading here. If we can continue holding these levels around 1950, I still feel real good about that one. CM is coming back on us. So we're glad we sold half of this last week. It's coming back, and 82 is our level that we're watching. Wouldn't want to see CM break below 82, but even if it does, we're guaranteed a big winner in this trade. This one was great. We sold half of our position for $11. We bought them for $1.50, right? So even if we got out around, let's say we got out at 80, those calls are going to have at least $5 of value. So that's just more profit that we're adding to this trade. And then what's up? Vale of Vale. Still looking good for us. These are December options though, so pretty soon we're going to be tightly trailing a stop on this one. So hopefully Vale kind of finds its level here soon. And then that's really it. Everything else is nothing really notable here. They're just doing what they do. Gilead still looks strong, although today not so great. IBIT, phew. I like that we sold the premium on this, and this is a new trade. We'll talk about that in a second. SEI, this is our risk reversal. We've already locked in profits here, so if we get stopped out at 40, not the end of the world. We'll still walk away winners here, so that's good. And then Lyft, looks like we're going to get stopped out of this one today. Yeah, in fact, I'd be surprised if we don't. It looks like we're going to close below $20 here. My stop is at 21. So pay attention to me in the chat tomorrow morning. We'll probably be getting out of Lyft. All right, so where does that leave us? Let's talk about the new trades we put on. We put on 3 new trades since we last spoke. We kind of touched on them briefly just a moment ago. We have a delta neutral trade on an IBM. And if you want all the specific details of these trades, you could find them at allstarcharts.com. Head to the member section, head to the options section, find your detailed trade plans there. And in those detailed trade plans, I tell you what the trade is, why I like it, what I like about the setup, what option strategy I'm using, how I may or may not be taking profits, how I'm going to manage risk. All those details are there so you could do what I do or take what you need from my plan and make it your own. That's what you really want to be doing, right? So IBM, we got a delta neutral trade on an IBM. We think this is going to kind of hold this range here. We'll see. Next up, Gilead. We're long Gilead. This stock looks very good. This is a very nice trend here, clearing some resistance. Blue skies ahead if we can, if we can hang in here. I don't like today's candle, but we're still above from where we got in. So This is not the sky is falling situation. And then lastly, IBIT, which is the Bitcoin ETF. We have a delta neutral trade on, and here taking advantage of high options premiums. We want IBIT to kind of stay in this range here, as you see on my chart. And again, all the details can be found at allstarcharts.com. All right, Let's see. I see Bobby in the chat. Vale is December 2026. Let me see this here real quick. That's a good question, Bob. Am I in the wrong? I think I had him for this year, but hold on. I'm gonna double check that because that's a very good question and a very important. You are correct, Bob. We are in the December 2026 calls. So I take back what I said about soon raising our stops in this, getting real tight. We don't need to because we have till December of 2026. I should maybe update my chart here to put that in there just so I'll remember that next time. You know, when you flip through all these charts so fast, you just kind of you forget things, like so many positions on. So thanks, Bob, for pointing that out. That's awesome. So hey, Vale is doing great. Let's keep holding it. No need to raise our stop. The thing's already working for us. We got a whole nother year for this thing to work out. Ooh, Bob, you just made me feel good about this trade. I like this. I like it even more now. What's my take on the rest of the year after today's action? Well, Kurt, I mean, look, it's tough to decide what's going to happen for the rest of the year based on one trading day. But like I said, if we lose these levels here, look, it's more obvious on the Qs. Let's bring up the Qs chart. If we lose this 590 level, which we're right there. We're right there now. We're right at 590. If we close below 590, especially meaningfully below 590 today, that's a bad sign. And that tells me that we have a lot more room to go, and we may test this VWAP and this 200-day moving average. Now, like I said at the top of the show, in a strange way, that will not invalidate this bull market, but man, will it make it challenging for any bullish positions you have on right now. But the good news is that if it pulls back into these levels here and finds support, we're going to have a whole new fresh set of fresh bases to work from for new legs higher into the new year. But man, Kurt, you've heard me talking about this probably for the last couple months. I was of the mindset coming into the end of the year that we were going to have a face ripping rally, big face ripping, performance chasing rally. And when we had this little breakout here on October 24th that continued on until October 29th, like to me, I thought this was the launch right here. This was it. This was the ignition. Let me zoom in a little bit. I thought these days right here, these 1, 2, 3, 4 trading days, I was like, this is it. Here it comes. We saw volumes rising into these breakouts. I thought that was it. But then we retraced it very rudely in the course of a week. And that was a bad sign. That was a bad omen. So I don't know if we have the face ripping rally in the cards for the end of the year. We still can. Anything could happen. We're always just one tweet away from the pumper in chief in the White House, right? I mean, who knows? Anything could happen. But man, I certainly don't feel as bullish and as ginned up about a face ripping rally as I did, say, a month or two ago. So that's my take, Kurt. All right, folks, that's all I've got for you today. Like I said before, I had no stops to update, so no screenshots you need to take there. If you're not involved in All Star Options and you're not getting detailed trade plans emailed to you directly, get signed up there. There's the link. The link's also in the chat at the top. And I also have a free newsletter that I write most days during the week, not every day, but most days when I got something important to share. It's totally free. You can sign up for the free note. That link is also in the chat in YouTube. Thanks for tuning in, everybody, and hang tight. And let's hope that the Qs can stick this 590 level. All right. I'll talk to you next week. Take care, everybody. Enjoy your weekend if you're starting your weekend soon. Bye-bye.